Face Warriors. Okay, today's investing.com day. Want to welcome all the viewers there. Also to remind anyone hearing my voice that if they're not happy with who they're trading through, to get a hold of our sponsor. That's Forest Park FX, Trent Hoare, and he knows all the brokers globally that may be able to help you with a solution. So I'm just noticing that there's a new pattern in playing the S&Ps. Greg is looking for a move up towards 2830 here. Okay, so we held where we had to, calling this a C wave before we head back down. This could be achievable, I think, by June 14th is my Dale Pinkert guess. Also, I want to cover the dollar, something that I talked about on Turnaround Tuesday on the full moon. Actually, it was Tuesday or Wednesday. Down here in front of the NFP, I would book it. So you don't have to agree with me, but you know, I'm not a big believer in taking big positions into a red number like the NFP. I believe it's roulette. It's a binary bet, black or red. I'd rather react to the reaction. So if you got short anywhere in here, you have a nice profit over 100 pips. And if we get a strong number on the NFP, I'd be looking to sell rallies back towards 440, 450 tomorrow. Give me why if you're with me on the analysis here. Also oil, really don't think this is a bottom, but I also don't think the bounce back is complete yet. So we have a little red candle. I'd be looking for reasons to get short up between the 69.5 level, 70 level in the coming days. Maybe there's one more push up next week with the weaker dollar. Euro's having a decent week. I believe we have a reversal week to the upside. Yeah, barely, but we have it. So don't want to fade the euro here. Perhaps we're headed back up towards this 119.30 level, and then we'll judge it from there. Dixie, I was looking for about 93 to 270, so we're about 100 from there. And I believe that we're still headed higher in euro pound. Let me just get to it. The euro Aussie was something talked about earlier in the week. This too held the 50-day weekly. Okay, so the weekly held at a significant point. We'll see if it could come out of here. If it penetrates this 50 at 54.72, there's pretty clear sailing up towards 580 to 56. So this may be the only position I carry into the NFP. I know I feel like I might be missing this gold, but I still am not convinced. With as weak as the dollar has been the last few days, the metals really haven't done that much. So I still stand by the fact that I think there could still be one more washout under the 16 level in silver. And that's when I'll be interested in buying gold, is if silver take out 16, head towards 1580, 1570 or so. I'll look at where the gold is at. Best guess, it should be trading around 270 into that time frame. Also risk on, risk off. I look at the yen. It really hasn't fought its way back to be unchanged on the week. We're still lower on the week. And I thought there might be a chance for a 1, 2, 3 bottom here. Here's 1, here's 2, but it's getting pretty stretched out here. So think that we're probably going to make a move up towards 109.5 to 110. So up in here would be an area where I'd be interested in selling the yen. I see nothing right here. If we just take this low of 108.11 and the high here, it's about 100 at 109.07, could take us back up towards the 110 level. Had a line here, it's not here anymore. And I want to welcome everyone from investing.com, encourage them to sign up with ForexAnalytix, because you get multiple views, harmonics from Andre, Elliot from Grega. In fact, Grega's going to be with us today. So he's going to update us on some of the looks. We have basic technical, and just because it's basic doesn't mean it's effective. I still believe in it. I use plenty of it myself. You get candlestick work, defining what different candlesticks mean and what the implications are of different candlesticks. And Stelios, who has been doing our macro for quite some time, I believe it is since ForexAnalytix opened, he's 100% on his patterns in play. I think he's taking a little heat in the NOK right now, but ForexAnalytix, I believe we're in our second year now. I've been here over a year. Pretty good, tough to beat 100% hit rate with Stelios. So congratulations, Stel, on, you prove that letting your trades breathe and not using any leverage or marginal leverage gives your trades room to breathe for the outcome, to be there for the outcome, instead of being picked off by having your stops too tight over leverage and being right the market, wrong the trade. Nice work. So I'm not sure who we're going to go to first. Most likely Steve Bogey, the most disciplined trader I've ever witnessed trade and analyze markets in my career, which is, I think I've been in the business at least a couple years. So Steve, how are you today?
Good morning, Dale. How have you been? I'm
good, buddy.
I'm good.
Good, buddy. So some decent follow through on the recent peak at 95 and the Dixie. Curious to see if you think that there's some more follow through, if this is a week that could lead to lower levels and what they may be. I think the whole world will probably be looking at the 92 level. Is that kind of
92, 92.50. Yeah, I think it's quite an important. I mean, it was quite an important resistance. It can be quite an important support once again. I think it's quite likely that we're going to see one more leg higher in the dollar. If this is just to be a corrective move, which my main scenario is that this is a corrective move, I think this is a bear market rally. But as you know very well from experience, many times bear market rallies or bull market corrections tend to be brutal, simply because they get a lot of fuel from one-sided positioning and one-sided sentiment that as we had recently seen for the dollar and for the euro. We were mentioning that specifically yesterday, that we hit a record low in the DSI for euro and almost and what a surprise that happened exactly at the turn, right? Now, having to do with seeing some follow through, I do think that some people that were riding this move will find this an opportunity to book some profits, and that on itself can lead to the counter trend move lasting for at least a few days. We're going to obviously be seeing specific charts, levels, etc. Greg is going to be with us in a while. We're also going to see.
You have an early, excuse me, Steve. Do you have an early read on what the market is looking for on NFP tomorrow?
You mean if I know the number that is estimated by the market?
Yeah.
Yeah, I think we're looking for 180K, roughly, something like that. The previous one was 170. We're looking for 180 roughly now, give or take. I don't remember now if it's 180, 182, 185, something like that. So the market is expecting a decent number for tomorrow. I can tell you that much. So more or less a number that coincides with what the average has been during the past at least dozen months. Yeah.
And what should our attendees be looking for within the number to give them more of a clue of, the Fed looks like they're going to go for sure in June, unless the Italian meltdown really affects our markets. And it looked like it was just a one-day wonder, that panic and fear in Italy, and now even Greg is looking for higher numbers. numbers in the S&Ps. So obviously not looking for any more turmoil, at least for a while. Maybe they, by postponing the elections to the fall.
By the way, I think, and Stelios can tell us about that, but I think
Yeah.
that today we're expecting to hear some news
okay.
having to do with how the story in Italy is going to end up, at least in the short term. I mean, if they will actually agree to some type of government to be formed now, or we're looking for fresh elections at some point during the summer, or at the end of the summer, or at the very, very beginning of fall. So I do think that we're expecting some more news today. We do have the NFPs tomorrow. My opinion having to do with the NFPs, and that has been my constant approach to the market and such events, is that unless the market produces something that is completely out of expectations, so unless it produces like a huge miss or a huge beat to the expected number of jobs, I don't think that the market is really going to pay so much attention to it, because employment has not been an issue for a long time now in the US, and I think the market is going to resume doing what the market wants to resume doing now. So in essence, in my opinion, there is a decent chance that if the market is like not very, very strong, the market is not going to be stopped by correcting a little bit lower for the dollar, at least until it can move higher once again. I do think that, yes, Elio?
Sorry, finish what you were saying. I just wanted to add something.
No, go ahead.
I came back literally 2 minutes ago and you were talking about Italy and all that. I just want to add one thing. I agree. I listened to what you said and I agree. You know, we're waiting now on a day-by-day basis to see what's going to happen. But one interesting thing that the market kind of reacted to it, although it shouldn't have, was that yesterday there was a joint, actually no, maybe it wasn't joint, but basically both parties, the Five Star Movement and the Lega Nord party, they both said, they reiterated that they never talked about exiting the euro, which is not news. You know, they said this from before the elections, and they're just reiterating it, and that is one of the reasons why the euro got a boost. But you know, just to put everything in perspective, you know, this is what they said before the elections, this is what they're saying now, and they're consistent, but for some reason the market kind of got surprised by it, if you know what I mean. So
yeah, you know how it is, Stelios, when the market hits extreme levels, and just to give an idea to some people, especially those that know statistics, for example, the move in the Italian 3-year yields was a 12 sigma move. That's a move you expect to see once in the lifetime of a planet, something like that.
Yes. I think so. Two-year yield went from negative 30 basis points, a negative small, to like over 2% in 2 trading days. Which is,
which are moves that statistically are in the realm of impossibility to happen, right? So obviously, when you get moves that are so stretched, the market is just looking for an excuse to revert somewhat to the mean. So I don't think that comes as a surprise. The euro was seriously oversold. We went from a euro that was at 125, and everybody was looking for 130, 135 in the longer term, to a euro that got sold like what was it, 7 consecutive weeks. And obviously the market needs to revert a little bit to the mean. As I said, it needs to pull back, even if that's going to end up being for a few days, a week, or a couple of weeks. Now, I do think that the dollar is not done correcting higher here. I do think that there is quite a high possibility that we're going to see one more leg higher. But I do think that unless we see something very strong from the NFPs tomorrow, we should continue having some kind of a choppy trading, or even a corrective move lower and unfolding during the next few days as well. Now we can obviously, Dale, we can obviously have a look at a few charts.
Okay, I was just showing all the different looks that we have in the euro while you guys were talking about it. So people that aren't subscribers know, look at all the different views you get. And I know that a lot of our subscribers look for when there's confluence between different methodologies and disciplines. That's confluence, just like you have confluence where some technical indicators come together, a fib, a moving average, pivot all coming in at the same place. You could do the same thing with all these different methodologies by the team, that when there's agreement by Grega and Andre and Blake and you and Stelios, where even if you get a couple different methodologies pointing towards the same outcome, it actually increases my conviction on the trade, and it's part of my intelligence gathering. So, yeah, go ahead, Steve, take over.
Absolutely, thank you very much. And people that are monitoring also our patterns in play know that, you know, we prefer being certain of what we're doing, and that's why we're also producing, you know, some very, very decent results. Now, I'm going to go ahead and briefly show a few things, because I know that Grega is with us, and as always, and I know that the vast majority of our listeners here enjoy that, I will be more than happy passing him the screen so we can start having a combined look of his Elliott wave approach and my basic technical analysis approach, because many times, as you've seen, they coincide. I mean, we tend to look from a different lens, but at the same time in a different way the markets, and I think this is also very informative for the people that are listening to us. So what I'm seeing here in the euro is Grega. Welcome.
Yes, I'm here. Welcome.
Yeah.
Hi, Grega.
Hey, Dale.
Hey. Welcome to the company. If you monitor on the 4-hour chart, and this is the 4-hour chart, let's go down to 8, you'll see that the Euro USD has already broken above a descending wedge. I mean, we overthrew that for a little bit, and now we are breaking above it. But if you see on the daily, I have it more as a channel, and we're probing above it. I do think that today's close is going to be quite important. I do think that if we actually, yesterday we got a very nice tweezer bottom. I think that if we actually manage to close above 117 and change, we might be headed towards the 119.30 area. As for a corrective move, let me reiterate here that no matter if it gets done from here or from a little bit lower, because 114.50 remains, a key level to the overall trend, I would be looking for another leg to the downside. I would be looking to sell this move. More or less the same applies to the cable. The cable falsely broke down below this 133 area. It now seems to be rebounding. I do think that if today we hold and we close above here, we might be headed back towards the 136 area, which I would love to short in any case. We are seeing also some substantial moves in the Kiwi. You can see here it broke above a triangle. Even if you interpret it as a bear flag that they have it right now, it's still trying to break above it. I do think that if it closes above 70 cents, the chances that it's going to unfold further higher increase. I would like to see one more move to the downside, but the more I see price action in the Kiwi, the more I doubt it. To be honest, Aussie seems to be better behaving, having to do with looking like it wants to produce one more low. I still see this as a potential bear flag. I do see that the move higher is definitely corrective in form so far. I mean, I do see an overlapping slow ascending bull flag. So 75 cents. I also wrote that the other day. 75 cents was a critical key level for the pair. It actually managed to hold it. It rebounded strongly above it. So, I remain neutral until I see what happens with either 76.40, which for me is a critical resistance area, or 75 cents, which is now a critical support area. Now, having to do with risk, and I'm going to pass it to Grega so we can see things together. If you remember, even from a couple of weeks ago, I was a little bit. I thought that there's a little higher chance that the correction is over and we're actually headed higher, because I was paying much attention to this potential triangle. And the more the days passed and we didn't break lower, in my opinion, the higher the chances became that the index is actually going to move straight up from here. Seeing the reaction that we got yesterday after coming down and retesting this broken trend line, the chances, in my opinion, have increased that we have seen the whole correction unfold. Now, I saw that Grega initiated the pattern in play. I remember that Greg a couple of weeks ago, I thought that it's a little bit of a higher chance that we saw another leg to the downside. Obviously, by days passing and not seeing some follow through, I'm guessing, Greg, that you also now think that it's a higher chance that we've seen the completion of the correction. Am I right to assume that?
No, not really.
Okay, then
I will explain why.
Okay, let me pass you the screen because I'm really interested to see what you're seeing here.
Yeah, sure. Let me just go to the S&P 500. So actually, still, if we just try to ignore the different possible wave counts, we still have to consider that this is not any strong recovery yet. We have seen some upside with the higher highs and higher swing lows, but still this is not that strong like maybe we have seen back here in like recovery back in at the end of February. So I would be very careful with the S&P 500 looking straight to the upside. And the reason, actually, I was looking for the reason yesterday why the S&P 500 bounced. And actually, this came from the lower 10-year US note. So as soon as the 10-year US note turned to the downside here, okay, yesterday, the S&P 500 found the support. But to me, the clearer picture is on the 10-year US note. I cannot ignore a clear bullish impulse that this market made since May 17. So for me, the 10-year US notes are in bullish phase. Okay, so I think that we are expecting more upside and maybe even forming a bullish head and shoulders pattern here. I see here left shoulder, head, now right shoulder in progress. So watch out for support around this 50% and 61% compared to previous leg up. So actually, S&P 500 found a base yesterday when 10-year US notes declined. Okay, I can make an overlay chart. And you can clearly see a strong leg up here when the 10-year US note found a peak. So I am looking and I'm trying to believe in the markets and the wave structure where I see clearer pattern. And to me, the 10-year US note has a much clearer short-term bullish pattern rather than bullish interpretation on the S&P 500 for the short term. So what I'm thinking is we can see in the next few days is a pullback lower on the 10-year US notes, which can send the S&P 500 even higher. But once the 10-year US note...
Let me say here that I agree with you. Specifically, I wrote yesterday in the analysis that I believe that specifically for the ZN that you're showing, that 119.75 to 119.80 seems now to be a nice horizontal area of support. So I do tend to agree with you. I mean, I do think that we got a very nice breakout from a descending wedge because actually the ZN was a descending wedge. And I do think that this strong rebound cannot finish in just a single reaction higher. I do believe that we should find support and move at least once again to the upside, at least.
Yes. And if this is going to be correct, then I think that S&P 500 will have some serious issues at this resistance around 2800. Okay, so what I think we may see is just a temporary push to the upside and then a reversal lower on the S&P 500. So with that in mind, I came out with this wave count, which is at the moment my primary count, and it suggests that we are still in a corrective phase here. Firstly, I was looking for a triangle. Now I'm considering maybe even a flat correction here for a wave B. So what I'm expecting is a push up into this resistance area and then looking for this market to turn again to the downside. I'm not sure if you will see aggressive weakness, but definitely I am expecting some kind of a weakness when 10-year US note is going to see more upside. So when it comes to trading, I would rather be prepared to be long 10-year US note maybe in next week or 2 weeks after that pullback that we see, rather than the S&P 500. during this time. Okay, but until then, I'm also still tracking this account immediately bullish interpretation that you highlighted as well, that we may see a push to new highs from here, because I can be wrong, obviously. So I'm still tracking two wave counts, and that's why I issued the PIP, because both wave counts,
both of them initially point higher. Yeah.
Both suggest that we could see move into this zone. So that's why I decided for the PIP, because we obviously completed a free wave decline, but I would be really, really careful here calling a wave free breakout, because I really think that 10-year US notes shows much clearer wave structure than the S&P 500.
Yeah, I'm with you there. I do believe as well that the technical picture for the ZN, for example, is quite clear at the moment. We shouldn't head to new lows from here. That would also seem very awkward to my eyes.
Yeah. So if someone asks me if I think the S&P 500 is going to new highs, I would say that probably we will stay sideways, consolidating for a longer time than someone thinks.
Might be the case. Might be the case. I mean, why not? Yeah, we still don't have confirmation that we're not in a broader consolidation. And
no,
you know, I've said here many times that corrections. The problem with corrections is you can never be certain of the structure in advance. So you know they need patience.
Yes, and once again, I would also look at other markets to confirm if we are really in a strong uptrend on stocks or no. So I'm looking at Nikkei. I think I have it here.
Nikkei found nice support at the 22,000 area. If you remember, we were looking at it together. We were agreeing that 23,000 in Nikkei was a nice area of resistance. But you know, I was expecting a pullback from there, and you know, I was monitoring 22,000 as you know a very critical area of support. 22,000 did actually more or less do the trick on a daily closing basis, huh?
Yes, but I think that this bigger picture suggests still that we may see a continuation to the downside after this completed flat correction wave B. So technically, I'm very bearish on Nikkei as long as we are trading below May 18 or 21st highs. And also what I'm seeing on the Hang Seng index is also consolidation since, let me take a look, stocks daily.
Guys, just from a sentiment standpoint, I don't sense the same amount of fear in stock indexes that I did a few months ago. Even with that big down day before we reversed it yesterday, I didn't see, a lot of fear and people going, oh, we're going to take out the 200-day moving average this time. So if Grega's count just back to 2,800, 2,830, I think most people will be thinking new highs are a layup then. And that's why it might be so vulnerable, because I just don't see a lot of fear. The VIX isn't showing much fear. The banter on Twitter is, the market's okay now, back to buying dips. So that could be an interesting scenario up there. At 2,800, people are going to go, oh, God, we're only 4% away from new highs. New highs should be a done deal. That may be where it's vulnerable.
Yes, exactly. So, and we know that market normally turns when sentiment is bullish. Same thing was on euro dollar. I know that I posted chart on Twitter when we were at this do or die level at important trend line support from 2017 lows, and I got few replies on Twitter, and everyone said that we are going down, And after a few hours, market completely turned, and it's now back up from that trend line 200 pips. So clearly sentiments plays a very important role when at very important levels. And if we go to that level, as you said, around
guys, sorry to interrupt for 1 second. We just had numbers from the US and Canada.
Yes.
Canadian GDP
month-on-month
beat slightly. Well, month-on-month it beat, but annualized quarterly was weaker, which is interesting.
1.3 versus 1.8. Yeah.
Yeah, and a core PCE in the US 0.2 versus 0.1, so stronger. personal spending stronger, initial jobless claims stronger. So it seems to be good numbers in the US, although revisions are a little bit weaker. But I think overall the dollar should be getting a lift here a little bit.
Thank you, Stelio. Thank you.
Thank you.
Since we just had Canadian numbers, why don't we go first over the CAD, so at the same time we can be monitoring how it responds now to the combination of US and Canadian data that we got.
Yes, I'm just
Gregor.
looking. Yes, I'm just looking at the dollar CAD here, and after that yesterday's turn lower, I think that we are still in this consolidation here. That can be a wave 2. We have seen just a temporary push to a new high, and now we are reversing quite aggressively. So those two
Flat correction
suggest that we can be in a flat correction, yes, and retest of these levels, wave A support can be seen. Also looking at this hourly chart, I think that there is a chance that we are trading impulsively here. So I would not trust current rise, especially not at this stage, because we are possibly in a wave 4 here. Okay, so what I'm looking at is for more weakness and then maybe a turn to the upside sometime next week.
Yeah, I did my duty since last week. I kept saying when asked about the USD CAD, and I still believe it, that there are much better opportunities out there. It's very clear that the USD CAD has been trapped in a very choppy range for some time now, and in my opinion, this is not the pair to be trading at the moment. Of course, everybody trades whatever they feel more confident about, but I do think there are much cleaner charts out there, at least in the short term. I don't know if you agree on that.
Yes, but but I would still be looking for potential longs on dollar CAD if we consider the crude oil could continue lower. So crude oil is now in a pullback, so it makes sense to see dollar CAD trading lower or in this range as well. But once crude oil finds resistance, I think the dollar CAD could find a bit there. So I'm watching dollar CAD and want to see what will happen once we reach these levels, as I said, next week. But for now, based on the short term, I think there is definitely room for more downside. So if we go to crude oil, what I see there is that we probably finish this wave 2 or wave 1 or wave A, and that we are now in a corrective pullback. And I'm watching this resistance at 69 up to 70. 70 is also some kind of a psychological level. It's also around 61.8%. So I'm watching these levels for potential.
Yeah. 69.40 is the level I'm watching specifically. I said it yesterday as well, that I would be very interested in shorting at around 69.40.
Yes, that would be okay, but maybe you should have some room for more upside here.
I always do. You know that. I never trade with tight stops.
Also, if you notice, market bounced. Actually, this correction is not a surprise. It came out from this trend line support. Okay, so from a channel. So I'm not surprised to see a recovery now. We still did not retrace back to the starting point of this wedge, which normally happens once the wedge is finished. So I think that there is a room, as I said already last week, there will be room for another 10% drop, if not more, as we can retrace even to $60 per barrel. So that's for dollar CAD. Also, I'm watching dollar yen still with the 10-year US note turning to the upside, right, and yields moving lower. I'm definitely ready to be short dollar yen, but on higher prices, I'm looking here at a completed 5-wave decline for first leg, either wave 1 or wave A. So I want to be short after this 3-wave recovery up to 110 levels. That would be a nice resistance up there, and then I would probably look for some shorts with selling.
I'm 100% with you. I was also writing yesterday and the day before that 110, in my opinion, is the line in the sand now. That
okay, so Greg, after 110, what would be? So you're saying this could be a 3 to the downside or a C to the downside after 110?
Yes, ideally will be would be a free wave decline, which means wave C. As you can see here, I'm tracking
105-ish.
Yes.
Okay.
So I would be expecting a drop towards 106, maybe up to 107 from 110.
Thank you.
Okay. Also, maybe a head and shoulders pattern could be forming here. This maybe left shoulder, now right shoulder if we go to a little bit higher level. So definitely worth to watch, especially because what the 10-year is doing, obviously. And also, I would be looking for yen crosses. Euro yen is still on my radar screen for potential shorts as well. But after some more clear evidences that we are here in a correction, I think that this can be a wave 4 unfolding. This wave 4, this was quite aggressive rally. So definitely, despite the fact that we are at already resistance for wave 4, I just don't see any clear evidences that this is a corrective formation. So even if I think that we are in a wave 4, I think we have to wait a little bit more and have
one thing that troubles me a little bit here, and I want your point of view, Grega. First of all, yesterday I booked profits finally in my euro yen short. I said I might have done it the day before yesterday. In retrospect, obviously it would have been better because I lost part of my profits, but it was still a very nice trade yesterday. By seeing the strength of the recovery, I did take profits. One other reason I did so was because I don't know if you've measured it, but the move lower, the first move lower, had perfect equality with the second move lower after the bear flag. So let me give you specific dates.
Yes, I know what you mean.
This was another issue that troubled me a little bit, and I took also into consideration in taking profits and not holding for longer.
Yes, and I think that you done the correct thing, because as I said, also here, this recovery clearly can be impulsive and can take us much higher. Even if it's wave 4, still, I think it's too soon to be again on the short side. So,
by the way, same deal with the pound yen. I know that it hasn't recovered with such a momentum, but the pound yen as well tagged the equality target. Right?
Yes. Around there, yes.
Yeah.
It was a little bit lower, but yes, enough close, obviously. But pound, it's much weaker than euro is. So if we want to again to look at some shorts, maybe this one can be also on the list. Maybe even
for me, the level I would be monitoring to participate in the short side, of course, if the price action gives me the right signal, would be roughly 147.50 for the pound yen. And as you very well said, I would prefer to be, now that I don't have any yen positions since I closed my euro yen, I would prefer my next short to be in the pound yen and not in the euro yen.
Yes. At the moment, yes, it looks like, but you never know. The pound sometimes can be very surprised a lot of markets. So
yeah, that's true.
It can be interesting sometimes. So this flows from weak to strength can very fastly change when it comes to pound. Okay. So what else do we have? I saw that you said about Aussie weakness. I definitely agree with more Aussie weakness. We are
Aussie looks very corrective, very corrective. I mean, this structure looks 100% corrective to me.
Consolidation here. Also, I'll be watching out this trend line resistance. It was a support. It can turn into a resistance up there. So New Zealand dollar is actually maybe forming a similar pattern here. Here there is still only a free wave rise up into these resistance levels. So again, maybe next week these markets could show some signs of a reversal lower. But for now, I think it's a little bit soon for New Zealand
Between the two of them, though, Aussie looks much better to the downside. So if I had to choose to be short one of those, it would definitely be the Aussie.
Yes, it turned very nicely actually down, and we are now at the support line. Let me look if this is maybe impulsive here.
In the short term, you mean?
Yes.
The move lower. Yeah.
It's not really clear at the moment, but so in such case, I would have to see something more. So let me just put this. So in such case, I want to see an overlap with wave A. Okay.
So something within 107, for example.
107.25. Yes, around there. Because in such case, we would be well below this trend line support, and also an overlap then with this wave A would clearly invalidate any bullish interpretations, which can be, as you know, a 5-wave rise in progress. So if I label both counts, maybe this is wave 1, 2, 3, and now wave 4, and you expect wave 5. Well, if we drop into this wave 1 region, then you know that this count would be invalidated. So if I'm bearish, and if this decline is not really that clear, not impulsive yet, then clearly I want to see this price to be overlapped before I may consider short-term pullback. Okay, so this one is actually can be very interesting here, as we can be turning back to the lower side of the range if that happens on the intraday charts.
Okay, perfect. What about, because I know a lot of people, I mean, I briefly showed them, but what about your view now in the fiber and the cable? Because we saw the euro and the pound against the yen, but we didn't see them.
Maybe I will firstly look at euro. Euro dollar, actually it bounced from this trend line support. So it bounced actually. If I get a lot of questions if euro dollar topped out here or no, and I still have the same answer as as I said a few weeks back, that this can be a free wave decline with an extended wave C, and we are now at the former wave 4, or it's already top in place. But the 4-hour chart suggests that we will see a free wave recovery minimum. So either we are going to see wave 4 here, or no, there is room for more upside in ABC fashion. Okay, so
so you agree with my view that this was at least a short-term low that we found. You don't expect lower first, right?
Yes, I expect more upside after a pullback.
Good. And me too. And actually, the level I'm looking for probable support is 116.40. That's what I wrote in intraday analysis today.
160.40. Yes, it can be. It's a little bit early for me. Maybe I would love to see some more extension to the upside, and then would look at this trend line to act as a support. So, but yes, definitely pullbacks could be interesting here, either to catch wave C or wave 3 to the upside, no matter what is the longer time frame count. So I think that euro dollar, especially since we bounced from that trend line support, I think, and also swing low, I think that there is room for higher recovery.
I know it's extremely early, and I'm the person that says all the time that, you know, corrections are very hard to predict in advance how they're going to play out. But assuming the most basic form of a correction, just eyeballing it, what would a rough target to the upside be for you? I mean, for me, it would be roughly 118.50. I don't know what you're thinking.
For 1.2 level.
So you're looking higher than 118.50.
Yes, it was a former wave 4 here. 1.2 level is also
psychological level. Yeah.
Yes, maybe even if we are maybe in some kind of a head and shoulders formation here, if we consider bearish case, then also this could be a nice resistance. And at 1.2, it was also the same thing here back in 2017 in September. So maybe something similar would happen here as well. So I would not be surprised if we see recovery back to these levels.
What about the cable? I would love to see 136 print again to short it. What do you think about it?
Cable, we know that the market made an impulsive turn aggressively through this channel, so I'm definitely bearish, but expecting a pullback. And I'll be looking this former swing high to act as a resistance if we go up to there, because this 1.3650 is also around this former wave 4, which was a triangle. So I would not be surprised to see a recovery up there into this area and then more weakness. But definitely on the long side, I would not be playing with cable, because move from the lows is not that strong. It's not impulsive.
Yeah, that's very true. It's a very weak rebound for the time being.
While euro dollar clearly is. So if, in fact, I think I have this euro dollar intraday count here. This was posted in the morning. I said that there is a resistance at the quality level for wave 5 compared to wave A, around 1.1720. So far we are turning down, so I think that first support, as you said, could be at 1.1640, but the second one is a little bit lower, 40 or 50 pips on there.
Grega, since you have this view of cable being weaker and preferred long being euro, I'm going to ask you about something no one wants to talk about anymore, and that's the euro pound. Do you have any kind of count there?
Yes, I have. For the short term, I'm bullish on the euro pound, and I am. This is the long-term chart. It's not very clear, because if you ignore the levels, you can actually, it's clearly a
channel. It's a descending channel, actually. It's a perfect descending, slightly descending channel.
Yes, but for trading, it's not really interesting for me. So, but
I totally agree.
Yeah, but I'm the only one interested in euro pound.
But for the short term, what I see is that there was a nice recovery here from in the middle of April, and now we are moving sideways. So what I'm seeing here is a wave B, maybe a triangle here. We are now at the upper side of the range. Watch out for a pullback, and then another spike to the upside, which could give bullish momentum on euro dollar compared to cable.
Like at 89 area. Okay.
Yeah, but the point being here, Dale, and you can testify to that. You remember since how many months ago you and people in the webinar have been asking me what to do with the euro pound, and my answer is nothing. Just stay away from it, right?
Well, I've caught a couple of nice swings to the upside, but I keep waiting for the breakout that never happens to the upside. Well, I just think that because of what happened at under 86.20, that was kind of like a false breakdown, and so we're probably due for a false breakout, and that's what 89 will do. We get up there, everyone's going to start talking 92, because we'll have broken out of the upside of that rectangle. So yeah, that could be a great short up there too. Okay, thank you so much,
As you know, Grega, and we can close the conversation about the euro pound here. My longer term view is that I would love to see at some point this descending channel break to the downside for one more push lower towards the 83.50, 84 area. But in all honesty, I'm not going to get involved as long as it remains choppy. I mean, it can go ahead and do its stuff for as many months as it wants.
Okay. Thank you, Grega, because you notice that if I asked Steve about euro pound, I really wouldn't get much of an answer.
Actually, I agree with Steve. I would not be trading it at all. But when looking for euro trades versus cable, then
you take it into account. You take it into account.
Is very clear, and I would not be surprised to see higher prices.
Okay, I'm with you. I'm with you.
Okay, let's go back to Go ahead, Dave, Grega.
Do we have any questions? Shall I cover any more markets or?
First of all, whoever wants to ask something, Grega, this is your time. Just use the chat and ask him. Grega, I think that we haven't seen the very basic here, which is the DXY. Let me say here that so far the weekly candle for the Euro USD is a hammer. The weekly candle for the DXY is a shooting star, no surprise there. Key reversal, especially for the DXY. where would you be looking for support in the DXY? We're looking for 92.50, 92.60 roughly as a strong area of support. Do you have something different in view for the DXY?
Just a second. Actually, as you know, I'm tracking again different waveforms, same thing as in euro, but I'm expecting a pullback, maybe back to this trend line support, back to this wave for termination point at 92.50 around there. Clearly,
so we agree on the target.
Yeah.
Yes, and I would be watching out for this wave B. So as we know, this is very similar, obviously, to euro dollar. So.
Okay, we have a question if something has changed in your view for gold.
No, because if you recall, Dale, I think that we spoke last week, I said that either gold will be bullish or will be sideways, based on what I saw on the market. So at the moment, we just see sideways price action, and still trading at this trend line resistance. There is no any evidences of a breakout yet, so I just can do nothing with this.
And it's certainly not impulsive, is it, Grega? I mean, this move off the low?
No, it's not. It's really not. If this would be impulsive, then I would probably already be long here, but because it's not, and because we are at this struggling at this trendline resistance, I really think that there is too early to be any aggressively bullish here. So I'm just seeing and waiting on more price data to get something more useful from the price chart.
It's like watching paint dry.
We have questions about Dow, DAX, and FTSE, Grega.
I'll be back in 5, guys.
Yeah, go ahead, Dave. Dow, DAX, and FTSE.
I have here some stocks that stock indexes that, but I don't have them all updated on this computer. So let me FTSE. Okay, so it looks like last time when we spoke, I was looking for a break to a new high and a reversal lower, and so far it's playing out well, but it appears that this was only first leg of decline, so I would be
one more leg lower
for more downside for sure. And
but regardless, you're viewing this as a corrective move lower, right?
Yes, for now, yeah, because it's more easier for me to predict a free wave decline rather than
anything else. Yeah.
Yeah. So.
What about the DAX?
For DAX, let me go to DAX here. DAX stopped at this trend line support, so I'm just wondering if this is maybe wave 4 or a temporary or a temporary top is in place and we go to lower levels. As you know, I was short DAX from higher prices on since Monday actually, but clearly at this stage, it's not really clear if we go down or back to the upside because decline so far was only somehow in 3 legs, right? So I would be very, very careful on DAX. Also, we stopped at this old swing high here. So with S&P 500, the short-term bullish structure towards 2800, I think that even DAX could maybe potentially reach higher prices. 13,000 to the test could definitely be possible here.
This is my main view as well, Grega. I was actually looking for 12,600 as a pullback support since days ago. I was showing it here on the webinar. We hit that area. I'm also, at least in the short term, bullish as well, the S&P. So I agree with you. I do see that there is a high chance that for the time being, that might have been it with DAX's pullback. I do think that 12,600 was a nice area to hold. It held. So I wouldn't be short. I'm not saying that it can't go lower, but I would definitely be very, very careful if I was short. You know what I mean?
Just give me a second. I want to take a look where DAX were this market actually. So okay, now I see. So I highlighted a lot in the past that market respects the gaps, right? So
yeah.
what I see is that it looks like there was some kind of a gap here back from April 30. Can you check it at your charts?
Let me see.
Yes.
April.
April 30.
30th of April. Yes, you're right about it.
Yeah, so actually you can see it was filled perfectly, and now we are turning higher. And normally these gaps, once they are filled, they cause reversal. So this can be quite significant for the short-term bullish view.
Okay, very nice. We have a friend asking about crude if you covered it. Yes, he did. Very briefly, you can watch the webinar's recording, but very briefly, Greg is looking for a rebound towards 69.70 roughly before one more, at least one more leg to the downside, one more leg of weakness. And we have a friend here asking if you can do analysis on the USD Singaporean dollar. I've actually been showing it to the webinar, Grega, because it actually broke higher from a long-term descending channel, and it's currently forming a triangle. I think there might be at least one more move to the upside if you want to have a look at it. USD SGD.
Yes, I'm just looking at here on trading view. This appears to be somehow kind of a bullish count here. On the long
I agree with you.
So
I agree with you.
Extended with 3, 4, 5, but we are probably now in a corrective phase. So
if you go back to a daily, you'll see that the move lower was perfectly channeled, and we actually finally broke above that channel near the end of April. And in my opinion, what we're doing now is that we're consolidating in a triangle, which tells me that we probably have at least one more move to the upside, at the very least.
Daily.
Yeah, daily.
This is weekly. Daily. This was a clearly 5-wave decline. We are now in a corrective rise. It's actually a very clear pattern here. 5 waves down.
Mm-hmm.
And we are now in a 3-wave correction. But I would be looking for higher prices here.
Yeah, because we're in a triangle, if you see in the short term.
Yes, it looks like a consolidation, minor one here. So wave C should be made by 5 subwaves. So if we also label the subwaves here, it's 1, 2, 3, 4, 5. So watch out for more upside, but then be aware of a turn.
Yep.
There's
I
also
100% agree with you.
With the 5th wave, we would probably also reach this wave 4 resistance. Up there. So I would be looking for something like this.
Perfect.
Let me also see the FIPS. Do we have interview today?
Yes, we have. Actually, Adam is with us. He just wrote in. Hi, Dale. Hi, Adam. So yeah, one last question. We have more actually, but we have time for only one fast. Yeah, he did discuss USD CAD. Do you have a fast view you can give us about the Nifty? I remember we've seen it together.
Yes, I have. Yes, I don't know where it was, but I think I have somewhere.
That's our face member. The first thing he does when he gets in the room. Nifty, Nifty, please, Nifty. You think he trade? Let me ask you guys. You think he trades the Nifty?
I mean, May 25th. Okay, so this trading view is actually very good. Everything what you typed in, every market that you have opened in your layout, you can actually find it very quickly. But I can see it's not the right one.
You jinxed it.
Yes. I don't know what is this. Come on. Nifty 50.
Not so swifty on the Nifty.
Yes.
Let me guess, one more leg to the downside.
Yes. Oh, this was an impulsive decline, clearly in 5 waves, which means we know where
One more leg to the downside.
Where the money is. So we are now in a pullback mode, I guess. This was quite an extended wave 3 here, sub wave 3 within wave A. So wave 4 resistance was much lower. Clearly, it was broken. So when one consolidation is taken out, which was this one, then watching for a pullback to this consolidation, which could act as a resistance. And I believe this is also at 61 or 78.6% fib level, around there. So I would be watching for market to maybe even see a failure.
Return lower. Yeah.
Yeah.
Thank
you
you
think
very
that
much.
probably happens during the next strong dollar phase after this dollar pullback's over? You know, it being, do they still consider the Nifty an emerging market?
It is an emerging market.
It is? Okay.
It is, yeah.
All right, so I don't think any of them like a strong dollar.
Yeah, in general,
Right.
yes.
Yeah.
Yes.
Okay.
Okay. Thank you very much, Greg. Enjoy the interview, Dale.
Thank
see you all
Steve.
in the
Thank you,
chat
Greg.
room, and tomorrow we'll be here.
You always crystallize for things for me, and it's really great to, you know, have some scenarios to be thinking about post NFP tomorrow. So thanks again. Okay. All right, Adam, I see you, buddy. My trading warrior brother, Adam Button's with us. Guys, stick around, because if you missed his last interview, you missed some very prescient calls that he made in April on his birthday. And it was for stronger stock indexes and stronger Bitcoin, and they both manifested in spades. How are you, Adam? Hey, buddy. Just waiting for your voice.
He's unmuted from our side. Dale.
There he is. Yeah. So, Adam, just the audio. Can't hear you.
We don't have audio. If you can check your microphone selection in the GoToWebinar.
All right, there he is.
Microphone.
How you doing, Adam?
I'm doing pretty well. How's it going over there?
Good. Good luck in your. Well, we're having an interview, but you look like you're dressed up for an interview.
Yeah.
Hey, you know what? Great calls that you made. I was telling the community in April you were looking for stronger equity prices, stronger Bitcoin prices. They both manifested in spades. So I'm very curious what you have on the docket for June. And then we could also talk about a few other things that might be on your mind.
Yeah, I mean, seasonals have been pretty good so far this year, all the way around. I mean, we didn't talk in May, but it was a month of euro weakness, and it kind of goes without saying that the euro really took a dive in May. For June, it's an interesting one again. I mean, it's a weak month for the dollar in general. I think the dollar index is down 9 of the last 11 years, and so it's not a lot of weakness in the U.S. dollar, but it's a soft one. I mean, it's going to be interesting just in the next few minutes. I'm trying to watch at the same time these tariff announcements, and if the U.S. is about to get really aggressive with tariffs, we'll we'll see what the blowback is going to be on that. I mean, I think the market's a little bit off guard here for whatever's coming. So there's a lot of this week left to trade here yet.
What's your take on tariffs and trade wars, Adam? I've talked and heard both sides. I've actually heard more, though, that a trade war would be bullish the dollar.
Well, that's what you think, right? On a risk aversion. I mean, positive for the dollar, except maybe against the Swissy and the yen, and is certainly negative for, or positive for something like dollar CAD, and then the euro probably even as well. But we'll see. There was some U.S. dollar selling earlier in the year on trade war talk. I mean, if they can't come to an agreement on tariffs with Canada and Mexico on steel tariffs, then you start to have to wonder if anything's ever going to get done on China. When you get that U.S.-China trade war talk going, you start to see the U.S. dollar weaken off. And certainly the last few headlines, I mean, we had Mnuchin 2 weeks ago talking about putting the trade war on hold, but since then is really deteriorated, and I'm not sure the market has been really on the ball on that. Italy's stolen all the headlines, stolen the front pages, and naturally that with Italy just blowing up in the bond market, but there is nothing really positive happening on the trade front, and I think the U.S. dollar could struggle on a few of those fronts. I mean, at the same time, the euro can bounce back. Italy's always a mess in terms of politics, and I think the worst is probably behind us there.
Okay, and the market agrees with you. I mean, the schizophrenic behavior, it was like, it was like the Greece crisis all over again for a day. And then the S&Ps break, they come back all the way 34 handles, 40 handles here. So any outlook, sell in May and go away in the indexes really didn't work again. So
well, June is the month. If you look seasonally, especially over the last 10 years, June is weak. It's the second weakest month in the S&P 500, the weakest in the FTSE or close to it. It's a weak month for global equities almost universally. And I think that's a little bit more of a straightforward trade on trade problems and trade wars. We're at the end of May here now. June doesn't look good for trade. The global economy isn't exactly shimmering, and the Fed's probably going to hike in 2 weeks, and the market's not going to like that a lot. So, there's a pretty good case here for getting away from equities seasonally, and I think fundamental.
And I don't you agree that the market is, in a way, signaling that by funds being gravitating towards the Russell, which they're more domestic companies and won't be as affected by a trade war. Therefore, Russell at new highs, compared the only index at new highs. NASDAQ's the next one that has the best shot. So maybe the Russell is confirming what you're saying, is that people are rotating into domestic companies, but they're going to be worried about being in the mega caps that have trade war and dollar exposure.
Yeah, there's a good case globally for staying in domestic focused stocks anywhere and avoiding kind of multinational companies that are heavily dependent on trade, especially trade in commodities or farm products or anything automotive that might be easily or the target of a tariff. So, we'll see what happens here just in the next hour. I mean, Ross could walk it all back and provide another extension. They said there would be no more extensions. The Washington Post is reporting that tariffs will come, but I just don't see how it can happen in NAFTA. That like an automotive part will cross the border like 20 times before it gets into a car. And the headache on a tariff on something like that is insane. It's almost impossible. I mean, you look at auto share stocks, they're not really worried about this. So it's just not adding up right now. I mean, I think all will become clear that this briefing is running a little bit.
I mean, the whole supply chain could break down that people don't think about, is that it's not just going to be the price, but when you talk about how complex it would be with tariffs, that you needed a part, that makes me worry about whether or not that part's going to be available in great supply. And I'm sure there's many necessities that come from loony land that we need, and many things from here that you guys need.
Yeah, it doesn't. I mean, the way the market's trading is trading as if nothing's going to happen for the most part. I mean, there are a little bit of jitters here. So if he comes out and announces tariffs, it's a complete side here. Although it really should be, I don't know. It's just not adding up in terms of how the market is reacting. But I think the risks to me are all towards the negative side just in the next little bit here. Certainly Canadian GDP wasn't great. And so we're seeing dollar CAD just tick up to the best levels of the day. Those nerves are real, and they should be more. But you know, you're just coming off the Bank of Canada, which was hawkish yesterday, so it's tough to square. I mean, oil's up today, so
okay, you brought it up.
So
that was my call of the year at 72.80 short, risking a buck. I had a 3-drive, the third up there last week. So crude went to targets that I thought would take weeks to get to in a week at 66. So does this kind of play into, you know, weaker oil? Maybe we rally halfway back or something to 70 and we get another wave down in oil, kind of play into, although it's not as big of a part of the equity market, it does make up, I think, about 16% of the index, and wouldn't be helpful if crude, which has been kind of a leader besides some techs, after this bounce fails and we go to 60 bucks. What does, go ahead.
Really any of the tailwinds for oil, it's a bit overbought. You have these stocks that ran up a lot, but they have pretty good yields on them. But, you know, OPEC is the story, and if they're talking about easing quotas, I mean, I mean, Venezuela is not getting better, but it's not really getting worse. So you have more production there. Shale's approaching 11 million barrels per day in the U.S. So, you know, I
You're bearish oil now, Adam. You think this was very
bearish? I mean, I've been bullish, but I don't see anything to push it much higher, meaningfully higher from here.
Okay. How about lower?
It's around the right time for you know, a stumble back, you know, the low 70s.
Okay, you mean, okay, so a recovery back towards the 70s you think is viable from here?
Yeah, that's
okay.
Right.
Okay, and that'll, whether it's a failing rally.
Interesting season, we were set to talk about seasonals. The first half of the year is generally strong seasonally for oil, and the second half is weak. So that seasonal strength kind of continues a bit through June. But setting up for the second half of the year, I think you want to, you know, you can sell oil on any kind of an uptick, and I think ride it out, expecting some weakness in July, August, September.
Okay, and how about the PMs? Where's the seasonals at? The precious metals.
Yeah, there isn't a lot here right now. The gold trade it's flat for the next couple months. An interesting one is Swiss franc. Look at it; it's the strongest month for the Swiss franc coming up. I mean, we've seen that weakness or that strength already in the last month. But if you look at some of the turmoil in Europe, possible trade war, the Swiss franc is, I think, really one to look at. It's a solid month for the euro as well. So maybe not be via a dollar Swiss would probably be the one to sell, I think there. But yeah, not a lot in metals.
Anything in Aussie?
It's the third strongest month for the Aussie and the Kiwi. It's not super strong, but it's a little bit better of a month for the Australian dollar. But that really reflects sort of U.S. dollar weakness more broadly in the month. It's not especially strong against the field.
Well, brother, when you and I get together, we cover the gamut in the most efficient way. You know, I mean, we get through the whole board. Anything you could think of I didn't ask you about today?
Yeah, we touched on a lot.
Anything on your mind that I haven't picked?
You know, I think just this Italy, coming back to that, I think this is probably the worst of it here now. I mean, I don't think anyone out there is really buying Italian bonds, but I think for stocks, bonds, I think we're about to get a handle on it. We may have a government, it might not be so bad. I think if you look at the long history of Italy, it's really one political crisis after another since the end of the war. And, you know, it doesn't meaningfully impact that much. Yes, we're going to have deficits again. I mean, it's a fiscal basket case of massive debt, but think for the next 3 or 4 months,
So
the market can't be focused on Italy every day. So, you know,
it won't be until their next elections, Adam. Is that what you're thinking? Until they call their
now it's, I mean, the headlines change every minute, but they might let them form a government again. So, you know, and then what they pass. I mean, no one's doing anything that radical when it comes down to it.
Yeah. How about our bond market?
And I mean,
our bond market had such a nice short squeeze, and you had record short positions, and that rally was so vicious. I believe it squeezed the short so hard that their eyeballs popped out. Do you look for a continuation move in there in treasuries and lower yields here in the U.S. during this time frame?
Yeah, the specs have been just killed on so many fronts. I mean, the market was so long euros this year too, and it just got cleaned out lately. And it was short Swiss francs, and the same thing there. And in bonds, I mean, I think that level was up in 30s. People were watching 10 so closely, got to 320, 3 up above 3, and 30s it was 325 is this major level. If you ever pull up a chart, I mean, it's just an obvious level, and we just touched above there one day, came back down. Bill Gross was talking about it. Jeffrey Gundlach was talking about it.
Yeah.
And that was really the wall, and now we're back below 3%. I don't know if we ticked above that again on 30s, but the bond market and the Fed is, you know, are sending two different signals right now. We're up around 80% for the Fed hike in June. I think that really has to happen. The Fed doesn't really have a chance to walk that back anymore. But beyond that, the market's like kind of 50-50 or 60-40 towards one more hike this year, while the Fed is still talking about 2 or 3 more hikes. So there's this divergence there. But I think if we start to get stocks kicking and screaming in June, the Fed's going to dial it down, and that's what's going to pull down the dollar. So it all starts to add up a little bit on dollar weakness.
Okay, we have it cased, and you know what? When you talk about famous people, Adam, I don't know if you've noticed it, you know, like Gross and Gundlach and all these guys. I've actually found that some of your more famous financial stars are better marketers than market players, and that unknowns like Adam Button, who's known by a much smaller audience than them, could dance circles around them. So, you know, it's great to have, you know, a humble guy like you come in and give us information that people don't normally get to see if they watch CNBC. So thank you so much, Adam, for being with us, and have a great June, a great summer. And I always appreciate having you here with me, buddy.
Well, I hope you're doing well, Dale, and hope you're enjoying everything down there, and have a great summer yourself. Thanks so much for having me on. Okay,
we'll talk soon. Everybody, Adam Button, you could follow him and see him at Forex Live. Adam, if you want to show the Forex Live website, so people could take
forexlive.com. We're going to have a seasonals package up today. I'm not sure which screen I'm sharing there. So,
okay.
Yeah, we'll have a full seasonal package up. We're going to have these tariff headlines here and some analysis on that as soon as they come. I know they wanted to have this before the market opened, but everything runs late in Washington. So we'll see what comes with that. It's very exciting day. So
besides being a good trader, and I know people criticize reporters because they say, well, reporters don't tell you anything actionable. They just tell you what, you know, today's newspaper. But these guys are on top of every fundamental development that happens out there. They're my go-to for fundies, and Adam's one of the best. So you could follow him at Forex Live, go to their website, or Adam directly at FX_Button. That's it for Thursday, everyone. See you for the NFP tomorrow, and don't just count your pips, count your blessings. Enjoy the rest of your day. Thank you again, Adam Button, and enjoy the rest of your day, partner. Adios.
Thanks.